Today, we will talk about the truth about Forex. Forex, FX, is a portmanteau of foreign currency and exchange. Foreign exchange is the process of changing one currency into another for a variety of reasons, usually for commerce, trading, or tourism. According to a 2019 triennial report from the Bank for International Settlements, a global bank for national central banks, the daily trading volume for Forex reached $6.6 trillion in 2019. Trading currencies can be risky and complex. Because there are such large trade flows within the system, it is difficult for rogue traders to influence the price of a currency. This system helps create transparency in the market for investors with access to interbank dealing. Retail investors should spend time learning about the Forex market and then researching which Forex broker to sign up with, and find out whether it is regulated in the United States or the United Kingdom. US and UK dealers have more oversight, or in a country with more lax rules and oversight. It is also a good idea to find out what kind of account protections are available in case of a market crisis, or if a dealer becomes insolvent. Read on to learn about the Forex markets, what it's used for, and how you can get started trading. The foreign exchange, also known as Forex or FX, market is a global marketplace for exchanging national currencies. Because of the worldwide reach of trade, commerce, and finance, Forex markets tend to be the largest and most liquid asset markets in the world. Currencies trade against each other as exchange rate pairs. For example, EUR/USD is a currency pair for trading the euro against the US dollar. Forex markets exist as spot, cash markets, as well as derivatives markets, offering forwards, futures, options, and currency swaps. Market participants use Forex to hedge against international currency and interest rate risk, to speculate on geopolitical events, and to diversify portfolios, among other reasons. The foreign exchange market is where currencies are traded. Currencies are important because they allow us to purchase goods and services locally and across borders. International currencies need to be exchanged to conduct foreign trade and business. If you are living in the United States and want to buy cheese from France, then either you or the company from which you buy the cheese has to pay the French for the cheese in euros, EUR. This means that the U.S. importer would have to exchange the equivalent value of U.S. dollars, USD, for euros. The same goes for traveling. A French tourist in Egypt can't pay in euros to see the pyramids because it's not the locally accepted currency. The tourist has to exchange the euros for the local currency, in this case, the Egyptian pound, at the current exchange rate. One unique aspect of this international market is that there is no central marketplace for foreign exchange. Rather, currency trading is conducted electronically over the counter, OTC, which means that all transactions occur via computer networks among traders around the world, rather than on one centralized exchange. The market is open 24 hours a day, 5.5 days a week, and currencies are traded worldwide in the major financial centers of Frankfurt, Hong Kong, London, New York, Paris, Singapore, Sydney, Tokyo, and Zurich, across almost every time zone. This means that when the U.S. trading day ends, the Forex market begins anew in Tokyo and Hong Kong. As such, the Forex market can be extremely active anytime, with price quotes changing constantly. In its most basic sense, the Forex market has been around for centuries. People have always exchanged or bartered goods and currencies to purchase goods and services. However, the Forex market, as we understand it today, is a relatively modern invention. After the Bretton Woods Accord began to collapse in 1971, more currencies were allowed to float freely against one another. The values of individual currencies vary based on demand and circulation and are monitored by foreign exchange trading services. 2. Commercial and investment banks conduct most of the trading in Forex markets on behalf of their clients. But there are also speculative opportunities for trading one currency against another for professional and individual investors. There are two distinct features of currencies as an asset class. You can earn the interest rate differential between two currencies. You can profit from changes in the exchange rate. An investor can profit from the difference between two interest rates in two different economies by buying the currency with the higher interest rate and shorting the currency with the lower interest rate. Prior to the 2008 financial crisis, it was very common to short the Japanese yen, JPY, and buy British pounds, GBP, because the interest rate differential was very large. This strategy is sometimes referred to as a carry trade. The FX market is where currencies are traded. It is the only truly continuous and non-stop trading market in the world. In the past, the Forex market was dominated by institutional firms and large banks, which acted on behalf of clients. But it has become more retail-oriented in recent years, and traders and investors of many holding sizes have begun participating in it. An interesting aspect of world Forex markets is that there are no physical buildings that function as trading venues for the markets. Instead, it is a series of connections made through trading terminals and computer networks. Participants in this market are institutions, investment banks, commercial banks, and retail investors. The foreign exchange market is considered more opaque than other financial markets. Currencies are traded in OTC markets, where disclosures are not mandatory. Large liquidity pools from institutional firms are a prevalent feature of the market. One would presume that a country's economic parameters should be the most important criterion to determine its price, but that's not the case. A 2019 survey found that the motives of large financial institutions played the most important role in determining currency prices. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.